Hey guys, what's up? On this video, I'm going to help you understand two things. One is the impact of de-dollarization. It's going to be a nerdy topic. In case you are interested, please watch it. I have been deploying a lot of my hedge funds money, my own personal money according to this concept. So very important video from that perspective. It's going to be slightly nerdy. If you watch it till the very end, I can promise you, you will learn a lot of interesting new things. That's one. Second is that I will talk a little bit about the investment strategies due to de-dollarization, right? This is a very important point. We all understand that US dollar is going down in strength. What does it exactly mean? Does it mean that you should put all your money in India or Sri Lanka or like Dubai, etc., etc.? So we'll talk about that. We will talk about investment strategy for people who are very new, who don't understand much investing, what simple strategies they can use due to this de-dollarization thing. Smart investors and wise investors. So how they should plan their portfolio. I myself am applying a lot of things that I'm going to talk about on this video. So this is a very important video. If you don't have the time, don't watch it now. Watch it subsequently, but definitely watch it fully. So that's my only push. So, okay, so let's begin. And first and foremost, let's quickly understand the meaning of de-dollarization. In simple terms, it means that previously, a lot of countries used to trust the US dollar, but with Donald Trump coming in, with the US presidents putting so much US dollar into the economy, people have started to lose faith in dollars. Now, when I say people, it's not people like you and me, it's the other governments across the world. So they have started to lose faith in the US dollar. Recently, you would have heard of something called as US bond auction. Now, US bond auction simply means that if US has to print, let's say $1 trillion, they just don't simply print and throw it in the economy. Basically, what they do is that they do a bond raise, right, or US Treasury raise. Up until this point, Japan, China used to be major buyers of these US Treasuries, but that system is fracturing. So therefore, there is a lot of talk that de-dollarization is going to happen. Countries are just simply going to move away from the US dollar. In 2021, when the Russia-Ukraine war broke out, then US came out and kind of banned Russia from using the US transfer system, which is called as the US SWIFT system. And therefore, Russians started buying a lot of gold, Chinese started buying a lot of gold, Indian government started buying a lot of gold, and this entire debate of de-dollarization came into the mix. So in simple terms, what does de-dollarization means? It means that countries will trust the US dollar less and less. Is that happening? To an extent, yes. So which brings us to point number two, that okay, fine. De-dollarization happening. Countries or other economies not trusting the US dollar. US is a bully. Trump is bad person, whatever, this, that. So okay, so great. That's the problem. What's the solution? You have to still continue like world trade. Countries still need to buy each other's product, etc. And for that, they need to depend on something. Now, what is that something? Well, it could be, I don't know, Sri Lankan rupee. It could be Pakistani rupee. It could be Chinese renminbi or whatever. So right now, there are three major contenders, right? The first contender is gold. And people are thinking that, if dollar goes down or the world goes de-dollarized, gold is going to go up. Great. And then they start quoting that, hey, the gold has skyrocketed in price. People are buying gold like crazy. So much great things are happening with gold, etc. But see, guys, there was a reason why gold got replaced. Previously, before like 1930, we were on a pure gold system, right? The world in general was on a gold currency, gold-backed currency. But between 1930 and 1970, we faced like two world wars, and that is when fiat money started coming into more and more prominence. And after 1970s, the fiat money came 100% into existence and gold was done away with. There was a reason why the governments across the world did away with gold. Why? Because the governments care about what? You will say people. No, they don't care about people. They care more about being in power. And what does being in power means for a government? Well, its ability to control money. Then comes the second contender, which is like a new age cryptocurrency called as Bitcoin. Many people get pissed when I talk about Bitcoin. But honestly, Bitcoin has been doing exceptionally well. My portfolio, right, I mean, you can check it here. It has been doing exceptionally well. It has Bitcoin. I bought Bitcoin at like 85,000 in the last or major bulk when I bought it, 30, 40 lakhs. It is already up significantly. The reason is that, yes, Bitcoin is gaining prominence. A small community is getting formed around it. But again, because of the fact that it allows to evade the governments altogether, I don't think governments are going to allow Bitcoin to replace the US dollar. That's not going to happen. Then comes the third contender. Then you say, okay, gold out, Bitcoin out, silver out. What else do we have, right? So, okay, what about China? Because China is growing like crazy. DeepSeek is there. Falana Dimga things are there. So, okay, what about China, right? Chinese renminbi maybe, okay. See, here's the problem, right? You again have to go back that when world wars were fought, Germany dictatorship, well, So US did what? US created like an anti-narrative of Germany. What was US? Land of the free, it's called, right? What does that allow the US to do? Well, it allows them to create something called a soft power. That, okay, people trust like capitalism, people trust money. If Americans are good at negotiating, if Americans are not pushy, they outline liberty, the concept of freedom, liberty, all this democracy, right? So that kind of creates like a situation where people would want to follow the US. They would not be arm twisted to follow them, but it kind of creates like, okay, fine, these people are free, so let's follow these people, right? But does the world have same trust on China? The short answer is no. China till date is associated with dictatorship, autocracy, however you put it. Long story short, again, irrespective of which country you go to, now you'll say, okay, Euro, what about Euro? Again, the same issue. There is no unity in Euro. What about like India? India is just too small to begin with, right? I mean, in terms of the world trade dominance. So long story short, all three options are not there, right? So like it or not, the world might be de-dollarizing. It just simply might be going down in value a little bit, but that does not mean that US dollar will not stay in prominence. It will very well stay in prominence. This can be seen on something called as DXY or dollar index. Okay, so a lot of people have been speaking about it. I'll put up the chart here and you can take a look. Okay, so this is DXY or dollar index, and basically what it indicates is the strength of US dollar compared to other major currencies. People have been really spooked with this fall, which started in 2025, right? In fact, even if you go before that, this started in 2022, right? So since then, you will clearly see that the dollar index has corrected quite a lot. And people are really panicking about the fact that, you know what, ab to dollar gyo. Okay, so that's the point, okay? But if you actually study the history, it's not that bad, right? I mean, this is behaving like a stock price in a way, right? This price or this DXY index used to exist at this point even in like 2016-17. So the point that I'm trying to tell you is that even from a DXY point of view, it's not as if that, you know what, dollar is going to go to zero. There are ebbs and flow to this DXY index. Sometimes it strengthens compared to other currencies. Sometimes it falls down. As long as we don't have a better alternate, I don't think anything major is going to happen to this. Okay, so this is like the central point that I want to communicate. Now, before I go to the investing part of the thing, let me also help you understand a little bit about where we currently stand on US dollar, what its prominence, and you can track it live, and there is a website. I'll put it in the description and comment box. You can track it live, right? And as to what the index currently points to. So there are 4 or 5 key things. This is called as dollar dominance monitor. And if you go, you will check that, okay, dollar share of global forex exchange reserve is 57%, right? Then share of export is 54. Then share of forex exchange is 88%. Okay. Now let's go to the number 2 currency. This is not the genius, right? I mean, here it's okay, fine, 57, 54, 88. But what's the closest competitor to dollar, right? When it comes to assessing the world dominance of that currency? Well, it's euro. Okay. Euro, 20%, 30%, 31. Now you'll say that, okay, what about like China, right? China is rising. So, okay, let's look at China. So 2%, 4%, 7%. Point being that nothing comes close to US dollar right now, be it in terms of global exchanges, be it in terms of the total trade, be it in terms of forex exchanges. So this is where the story currently stands if you just look at the data and numbers. But if you step back and think that, okay, what is it that the US is trying to do? Because US is not going to just sit and do nothing, right? I mean, they understand that, you know what, boss, the countries are kind of not buying our bonds. What do we do next? They're already doing it, right? One is that they are kind of cornering the crypto space, right? Be it like creating Bitcoin reserve, they have already done it. They are the leading players now. Be it artificial intelligence, because if they understand that if they can push like real growth in the world, the foreign money will come to the US. Because at the end of the day, what is the meaning of dollar dominance? Well, dollar dominance gives easy financing to the US, right? And when the world is taking US dollars, for example, let's say Japanese are buying US bonds. Well, what is happening there? Well, the Japanese are getting a piece of paper and America is able to print more money, right, in US dollar terms. Now, what happens to that additional US dollar currency which comes into circulation? People who will eventually get that money, let's say Japanese people, they will have to buy what with it? They will have to buy US denominated assets with it. Now, for example, if the Japanese investors think that, you know what, boss, the US economy is doing well, let's go and buy like US stocks. So that finds purpose. So that additional US dollar finds purpose. Point being that having like big asset classes, be it like US real estate, US stock market, US bond market, all these are US dollar denominated. Now, if they are big and thriving, Genuinely, I'm not saying that there is fakery around it. No, there is a lot of issues with US stock market also. But long story short, when it comes to this AI revolution, when it comes to new age technology, when it comes to the flow of money, this becomes a very important conduit for this US dollar which is getting printed to flow to these systems and processes. So long story short, what is going to happen is that US has already started identifying that, let's push Nvidia, let's put like Palantir, let's push like a bunch of these different companies which become good investable asset for foreign investors. So I was just reading the news and Nvidia, a single company, has become the 5th largest economy in the world. Not kidding, right? I mean, you just look at the market cap of Nvidia, compare it to the GDP of different countries, Nvidia comes out at rank 5. Okay, so that's how valuable Nvidia has become. And Nvidia is not a sole player. Okay, there are a lot of other companies. For example, out of $10 trillion companies, right? I mean, if you just pick the top $10 trillion companies, 8 are in the US. So that's how huge the US market is. They are already pushing it up, giving enough investable option to foreign investors that kind of pushes the US dominance or US dollar dominance in the future. They're already working on a reserve plan. AI can really propel growth and that can add value. So which brings us to the next and final segment, which is that, hey, if you are an investor, how you should think about dollar dominance. What is it that you should think? Okay, so number one point that you should think is that you should not assume that other currencies are going to do relatively better than US dollar. A classic case study is if you do the comparison of INR with US dollar, and here I'm just using Google to prove the point, right? So just let's take a look at this. On an average, if you consider last 5 to 10 years, INR has depreciated, which means gone down in value compared to US dollar, roughly 3 to 4% a year. Okay, so on an average, every single year, INR loses 4%, 3 to 4% of its value. So let's look at what has happened, right? So this trend has been well established from 2008. Okay, so long frame, it kind of aligns. What about like a 5-year frame? Again, it kind of aligns that INR keeps on going down in value. What about 1 year? That interestingly, what has happened that this went up, right? And it was strengthening. The US dollar was strengthening compared to INR, which means that INR was falling. Then there was a brief period between like March to May, right? Where INR actually gone up in value. This was a blip. This was not like a normal norm. And since then it has been going up, generally speaking. So long story short, there is no reason to believe that, INR is going to do better than compared to US dollar. Because typically what happens is that two things need to happen. One is that you might have heard of the news that, the Chinese manipulate their currency. What do? Well, they keep their currency artificially low. Now, why? Because up until like 5 years ago, China used to export a lot, right? But they used to be in low-end export. Now, if their currency went up in value, then that would reduce their exports, right? So how does that happen? That's a separate video. Maybe I'll make it. But yeah, this is generally how it happens, right? So in India's case, the problem is that we are not a net exporter. We are a net importer. Second, our currency is kept artificially strong, not weak, okay? 3, we are not migrating towards high-end exports. So long story short, what is happening is that we cannot say that, hey, this trend is going to continue. So you can't really design your investment strategies based on the fact that INR is going to get strengthened. There are a lot of issues or sub-issues that happen. But the central point that you need to pick from this mini conversation is that, see, unless you see data that India has become a net exporter of goods, and is consistently net exporting things, there is no reason to bet on INR compared to US dollar. I'm just telling you facts, okay? People make it a nationalistic issue. It is not. It is like, normal free float currency issue that you need to be aware of. Now comes the second point and the more important point that, see, what is going to happen is that currencies in general are going to lose its value because there is more inflation in the world. Okay, this has got nothing to do with dollar dominance or dollar going down in prominence or dollar strengthening or something of that sort. It's just that more currency is printed net, right? And as a result, the buying power of real things in the world goes down. For example, since 2021, the food inflation has been crazy high. If you look at medical inflation in India, it is 12-14%, which is madness, right? It is just going up in value too much. So you as an investor, what do you need to do? Well, so here is a small data set that I have prepared and I'll just take you through it, right? It's very simple. Okay, so I have prepared this note, right? And I borrowed this piece of sheet from my son, right? And it's his sheet, right? So, and I'll just take you through this, right? And I'll flash it on my screen also so that you are able to understand this, and I'll just walk you through some commentary, okay? So, okay, so here is what you need to know, right? And this really depends on your skill set as an investor, where you are in your investing journey. If you're just starting out, let's call you dumb investor, okay? So if you're a dumb investor, what you need to do is that you need to split your money into 33% each, according to me. This will look radical and you might not agree with me, so be it. Every investor can have their own viewpoint, right? I mean, you do you, right? I'm just helping you understand. See, the first key thing is that you should buy dollar denominated assets. The reason for buying dollar denominated asset, 33% of it is very simple. That's see, compared to like other major currencies except for maybe like Swiss franc or Singapore dollars, US dollar still has very good transactability compared to emerging market economies. For example, if you consider it just like Indian rupee returns over the last 10-12 years, stock market returns. So stock market would have given like maybe 12.5%, but adjusted to US dollar, it has only given 8.5%. But if you look at QQQ, which is NASDAQ, in US dollar terms, it has given you 15%. Now that's huge difference. So therefore, I'm saying that invest 33% of your money in US stocks. In case you are interested, I do run a community on US stock investing. Everything is macroeconomically taught. The fund is doing exceptionally well. You can check the performance of the fund. So everything is fundamentally taught. In case you guys are keen, I'm leaving the links in the description comments. So this is one. The second key point that I will encourage you to think about is that figure out a dollar hedge. Now, what is the meaning of dollar hedge? Well, Bitcoin is a dollar hedge. For example, recently Bitcoin is rallying, but US dollar is going down. Why? Because it has been proven in a way, right? There is a negative correlation between like US dollar strength and Bitcoin's strength. So if US dollar goes down, Bitcoin goes up. If you don't trust Bitcoin, buy like gold. If you can't buy gold or don't want to buy gold, you can buy land, right? This is another hedge, but land does not come cheap. You will have to shell out a lot of money. REITs is another option, but in a market like India, I would not propose you buying REITs. But if you can buy it in Dubai, if you can buy it in Singapore, then yeah, that's worth considering. So this is the second bucket where I would encourage you to put money. Third is global indices. There are a lot of indices. For example, Southeast Asia, if you look at Middle East, they all run their own indices. These are viable options. You might not have heard of these. A lot of interesting work is happening in Southeast Asia. China is doing a lot of proxy exports via Thailand and Vietnam, right? If you look at Thai baht has actually strengthened over the US dollar recently. So that's again, like, I mean, if you are looking just at INR, you can look at this also. So global indices is something that I would encourage you to check out. In case you guys are keen, I'll make a separate video on that. So yeah, so this is what like, anyone can do with their full-time job. I don't think this requires like crazy amount of research or something. Second would come smart investors. Now, smart investors are second category. Here again, the basics remain the same. It's just the timing component that you need to consider. For example, 33% would be US stocks or US indices. Now, see, for example, guys, I mean, when there was an April dip, I bought a ton of stocks in the US, approximately like $1 million worth of stocks. All have gone up 25-30%, something like this. Real returns, very good. So I timed the market well. Okay. Now, many people again get pissed off that, okay, you're talking about timing the market. People cannot time the market. Don't do it. I'm just encouraging like smart investors here. I'm not encouraging like people who are just new to the stock market to do it. If you can figure out a way, if you can learn, if you can invest time, well and good. Otherwise, what you can simply do is that check some index which are trading below their all-time high by 10-15%. For example, something like semiconductor index, it's trading 15% below its peak. So you can definitely consider that, right? So that's something where I would talk about market timing. Now then comes the third point, which is avoid long-term structurally bad equipments. For example, PF, EPF, NPS, all that, guys. I mean, honestly, like they are giving you like 8% on 10-15 year basis. It makes no sense whatsoever. If you think about it from a money growth point of view, the last 5-year average inflation in India, which is official number I'm telling you, is 5.5-6%. If you are making, after taking stock market risk, 8.5%, it's just madness. It just does not make any sense. This is not where smart money should be. If you're completely dumb and if you have no clue, then great. Like NPS is a great product, plan your hypothetical retirement with it. Cool. Okay. Wise investors, what should you do, right? I mean, these are people who already have decent amount of money. You should think about tax optimization, very critical, right? I myself have optimized my taxes really well now, right? So I'm quite happy with that move. You should optimize your cost of living, right? For example, you might be surprised to know that countries like Thailand are cheaper than most of the metro cities in India. Not kidding, okay? There are many such destinations, right? Not just Thailand. If you like Vietnam, if you like many parts in Southeast Asia, they are cheaper, better quality of life, lot of good things. Now, I'm not saying that abandon your family, move to like whatever Vietnam. No, like, I mean, you have to plan a lot of things, but that's cost of living estimation is something that you can run. At the very least, start looking at like, tier 2, tier 3 city to live, right? With good connectivity to metro. Why? Because in metro, there is no quality of life left, to be honest, and the cost of living has really escalated. Third is that be a contrarian player. When you see good opportunities, definitely buy, right? This is very important. That markets have become very opportunistic. There is a lot of volatility. And if you don't play along with that, right, yeah, that would not be very useful. So yeah, so that's the end of the video. I hope you guys enjoyed it. If you did, do subscribe to the channel and I'll see you soon.